Welcome, everyone, and thank you for joining us for another workshop event, this time focusing on financial literacy. These workshops have been a main focus of mine since taking office. I've been trying as hard to bring these types of training and resource directly to the people of my district. I want to thank Wells Fargo and specifically Ms. Serrano for organizing this with us and preparing this presentation. Financial literacy is one of those incredible, important lifestyle skills to learn, and yet it's sustainably covered. It's not sustainably covered in our educational system. That's why I want to get this workshop together to help you learn all the various best practice for our financial systems. What better way to do this than to learn from the experts? So Jessica, thank you and everyone that's joined us today, and I'll let you take it away from here.
Thank you. Good afternoon, everyone. How's everyone doing today? I hope great. Another day in paradise. My name is Jessica Serrano. I am a personal banker for Wells Fargo here in Stockton. I've been in banking for 7 years now, and I am extremely passionate about financial literacy. I grew up in Stockton on the east side of town, went to Franklin High School. We didn't have these resources growing up. I was taught with the little that my parents knew, Getting into banking just was an eye-opening experience. We've missed out on so much. So I'm extremely happy to be here with you guys today. Our topic today is on credit, one of the most important topics in finances. So awesome. Ben, if I can have you turn the slide. Awesome. And then Ben, if we can go on to the next slide, please. Alrighty. Our topics for today may seem unfamiliar to you, but that's okay. That's normal. That's why I'm here today. Our topics today will be credit basics, debt to income ratio, the 5 C's of credit, establishing credit, improving your credit, managing your debt, and getting ready to apply. So this is going to be our main focus today. If I can have you go on to the next slide, Ben, please. Our credit basics. What's a credit report? What's a credit score? A credit report is a detailed list of your credit history. From the moment that you turn 18 years old and on, everything that you've done will stay on your report, which is why it's so important that we're consistent. A credit score is a representation of how responsible you've been with credit. Think about it as a grade that's given to your credit report. That's the difference between those two. I want to show you guys a visual representation. I'm extremely visual. I like to see things on paper, everything, right? Our credit score components. So as you can see on the credit bubble, 35% is our payment history, which is why it's so important that we're always on time, paying more than the minimum, and never being late. 30% is the amounts owed, our debt. 15% is length of credit history. That's why it's extremely important to have established some credit by the time you turned 18. 10% is new credit. It's always recommended to have a new credit product every year, once a year, to keep that going. And 10% is a credit mix, which can be a loan, a line, credit, anything. This is what makes up our credit score components. But it's just so extreme that I put our attention to our payment history and amounts owed. That's what lenders look at. Awesome. Ben, if I can have you turn on to the next slide, please. Awesome. So as I mentioned, I'm a very visual person. I know some are too. So we broke down what your credit score should look like. And I'm going to touch bases on where you should check your credit score. We have 3 credit bureaus that you can go to: TransUnion, Equifax, and Experian to check your credit score. I personally use Experian. It's a free credit app that you can use. It will monitor your credit score. It will show you where you ran your credit, how many inquiries you had, and it's free. You pretty much get to see a visual of things how they're broken down. So for example, let's place our attention to the highest one. Excellent, it's considered 760. You generally qualify for the best rates depending on your debt to income ratio, which we'll touch on in the next slide, and collateral value. Good credit is 700 to 759. You typically qualify for credit depending on your debt to income ratio and collateral value, but you might not get the best rates. Fair credit is 621 to 699. You may have more difficulty getting credit and will likely pay higher interest rate, which is what we don't want. And we'll touch on more in the next slide. Poor credit is 620 and below. You may have difficulty getting unsecured credit. And then we have no credit score, which is okay. We start there. At age of 18, that's where we start. Whether you've starting your credit or you went through a bankruptcy, there are different ways to rebuild your credit, and I'll share that along the slides. Do not get discouraged. It's a visual, it's a representation to motivate you. And where we want to be is an excellent 760 and up. Awesome. If we can turn to the next slide, please. So debt to income ratio. It's a term you might not see often, right? But it's a term that I want to stick with you. So this is another visual, you guys, that I placed on the slide. Debt to income ratio, a comparison between how much you owe each month and how much you earn. So your how much you earn from your deposits, which can be from Social Security, SSI, your pension, unemployment, minus your monthly debts, which are your rent, mortgage, child support, credit card payments, car loans. You're pretty much subtracting your monthly income to what's coming out of your account. So a visual here on the slides, a DTI example, based on a $5,000 monthly income with a $1,500 in monthly debt payments, your remaining income is $3,500. You're pretty much just subtracting things. But I do want to share this cool resource that we offer on our wellsfargo.com website. It's at the bottom, wellsfargo.com/debt ratio. If you want to see what your DTI ratio is, it takes about 3 minutes of your time to get a visual of where you stand financially. It's a free resource on our wellsfargo.com website that you can use, and it'll show you. And the reason why I'm bringing that up now is because during the remaining of the slides, it's going to be very important. All lenders use this tool to identify if they're able to lend you funds, whether if it's on a credit card or on a car loan, home loan, personal loan. They use the same tool. So keep in mind, like I mentioned, a comparison between how much you owe each month and how much you earn. Awesome. And then if we can go on to the next slide. Like I mentioned, it takes 3 minutes of your time to mess around on that tool. You can do that later on today, tomorrow, but it's very important in a visual just to see where you stand financially with your debt. After you calculate on that calculator, it will give you a percentage, okay? So the Wells Fargo debt to income ratio standards. So let's say you get 35% or less. That's awesome. That's good. You have money to save. You have money to spend. You're doing great, okay? Let's say that you get the percentage between 36% to 49%. You stand at an opportunity to improve. You may want to consider lowering your DTI to get into a better position to handle potential financial emergencies. Life happens. We may lose our job. You don't know, right? COVID happened. Look what that brought us to. If you're looking to borrow, keep in mind that lenders use different factors to determine your ability to repay, including your monthly income and financial obligations like loan payments, rent, and other bills. Now, if you calculate your percentage and you're between 50% or more, consider taking action. That's where you need to see and prioritize what's important to you. With more than half of your income going to your debt payments, you may not have much money left over to save or spend or handle unforeseen expenses. With this debt to income ratio, lenders may limit your borrowing options. It's definitely going to be a little bit more harder for you to apply for credit, apply for a loan. So this is where accountability comes in. We have to take accountability and see what we can do to better ourselves and eliminate debt. And then if we can go on to the next slide, please. The 5 C's of credit. Working here at the bank, the first time I saw this, I was just like, wow, very eye-opening. I didn't know that we had this terminology in banking at all. The 5 C's of credit are very important to have a good credit score. Your credit history, your track record of managing credit and making payments over time. Like I mentioned, from the moment that you turn 18, any little thing will be on your credit report. Whether you've been late, you've missed a payment, you went through a bankruptcy, it will be on your credit report. Your capacity, your ability to comfortably manage your payments. Are you able to afford your monthly payments? Do you have that income coming in for your monthly payments? It's very important. Your collateral, something you own that you may pledge to secure a loan. Collateral can be a house, a car, a CD account. So if unforeseen emergencies happen in life, you're able to go back to this, your own collateral. Number 4, capital, savings. That's why it's so important to have an emergency savings account. Investments, any other assets that you could use to repay a loan if you experience a financial setback. Like I mentioned earlier, last year was a very difficult year for all of us, right? Whether we weren't working or we weren't working our full-time hours. It's so important to have an emergency savings account in case something happens. And number 5, conditions, the economic environment and how you plan to use the funds. So it just depends on where we are in the economy. These are the 5 C's of credit. So I hope that at the end of the presentation, you at least remember one of them, maybe even all of them. These are going to be your best friends to have amazing credit. Because remember, we want to be from 760 and up. Awesome. If we can go on to the next slide, please. Establishing credit. This is actually my favorite slide out of the whole presentation. So laying the foundation for good credit. I can't stress this enough, paying your bills on time, every time. If you are the type of person that you're very forgetful, it's okay. We're human, right? But that's where you want to set in reminders, alerts, automatic payments to hold yourself accountable for these payments that are coming out of your account. Because the moment that you miss out on one payment, your good credit will go down. It doesn't matter if it's 1 time, 2 times, that's all it takes to knock down points from your credit score. Opening a checking account and use your debit card responsibly. So it's good to have good habits in mind, right? It all starts with your own personal accounts, with debit account. We want to make sure we never go negative. We're never overspending, overdrawing our account. This will teach us healthy financial habits from your debit account to a credit account. Okay. And the last bulletin on laying the foundation for good credit is building a savings account. Once again, it's so important to have a backup in case life happens again. And you don't have to have thousands of dollars in your savings account. It's okay to start small. You can start by establishing a recurring transfer from your checking account to your savings account of $25 every week or every 2 weeks, or even increase the amount that you're transferring over. And another thing that I do recommend is having more than one financial institution. You want to make sure that you have funds spread out so you're not easily tempted to get into money that you shouldn't get into. I personally have 3, and it's helped me out tremendously. Ways to get started with building credit. Now, everyone always asks, do I have to go to a bank to start my credit? You can, but that's not always the answer. You can establish credit anywhere, whether if that's at a gas station, at the mall, Best Buy, wherever. But my recommendation is you just being cautious and asking the right questions when applying for credit, okay? Majority of credit accounts will charge you an annual fee just to have the card. You want to make sure you're questioning if they do or not. For example, with us, we don't charge an annual fee. It's awesome that the gasoline station does offer the credit cards because gas is expensive right now, right? But just keep in mind when you're applying for the credit cards, you're asking those right questions. What's your interest rates? How do they look like? Do you have a promotional offer? How much is my annual fee? Little questions like that we can touch on at the end of the slide. So you're prepared because at the end of the day, you're responsible for these cards. You're responsible to repay these back, right? Second on the bulletin, become an authorized user on a trusted person's credit card. Now, keep in mind, you can be added to a relative's credit card. That's nice. You'll have access to their credit limit, but it will not help you establish credit. You're actually helping them with their credit. You're just being given the opportunity to use their funds. And keep in mind, that's not what we want. We want to be able to establish our own credit. Emergencies happen. It's okay, right? We'll use their funds, but what you want to do is apply for your own credit. Number 3 on the bulletin, apply for a loan with a co-signer or co-borrower. Let's say you're shopping around for a car and it's going to be a little bit more harder for you to get approved. You can ask someone to be your co-borrower or co-signer. Keep in mind, they will be entitled to be on your loan. So if you miss a payment, it'll affect them. If they miss a payment, it'll affect you, vice versa. So you want to make sure that if you're asking someone to be on the loan with you, it's someone that you trust, someone that's reliable, because we don't want to affect our credit score whatsoever. Charge only what you can afford. It's extremely, extremely important that you're not overspending. I understand. I feel like we've all experienced this during our younger ages, right? You have all this amount on this credit card and you're going to want to swipe, splurge. But it's definitely important that you only charge what you can afford. I get it. Society pressures you to have the shoes, the bag, the clothes, right? But at the end of the day, you want to ask yourself, what's important, okay? The last one on the slide, avoid maxing out your credit accounts. This is huge, you guys. This is big. You do not, if you have a line of $1,000 on a credit card, you do not want to be at $999. That will look extremely bad on your credit report and your credit score actually goes down. So that is definitely not recommended. If you have a limit of $1,000, keep it at under 50%, just use $500. Emergencies happen and that's okay. But keep in mind that if you do max out your credit accounts, it will hurt and affect your credit score. Okay. Awesome. And then Ben, if we can go on to the next slide, please. Improving your credit. So you are actually entitled to a free annual credit report on this website, annualcreditreport.com, or you can actually call, but it's a little bit more easier to do it online. You actually get a free report from all 3 credit bureaus, like I mentioned, TransUnion, Equifax, and Experian. It's a detailed report with where you ran your credit, have you been late, etc. Perfect. For the next bulletin, be responsible. I can't stress this out enough, you guys. Make consistent on-time payments. If you know your payment is going to be due on the 1st, pay it a few days beforehand. Have that automatic payment set already. Another big recommendation from my personal opinion is paying more than your minimum payment. If your minimum payment is $25 and you owe $500 on your credit card and you have that extra cushion, pay more. You know, at the end of the day, it'll look good on you and your lender will actually see that as well. Okay, I can trust you. Let me increase your spending limit. So keep in mind, pay on time and pay more than the minimum. Third on the bulletin, be consistent. Practice healthy credit habits. Like I mentioned, if you're out at stores, ask yourself, do I need this? Can I repay this? Do I have the money to spend? Hold yourself accountable. It's extremely important to do so in this day and age, right? It's really us against us. So we want to make sure we're being consistent and practicing healthy credit habits. Keep your balances low. Using as little of your available credit as possible reflects responsible use of your credit limit. So what you can do if you don't want to charge a lot on your credit card, you can set up automatic payments to be deducted from your card. That actually helps you stay on track with your bills and your payments, everything on time. Stabilize your situation. This is my favorite one. Set a budget and hold yourself accountable again, you guys. Set a budget, you know, how much are you making in a month? And we're subtracting our payments that are coming out for the month. Do you have money left over? Are you on a hard financial time? Are you living paycheck to paycheck? Making a budget will actually help you focus more on where you want to go with your goals, your financial goals. Another visual that I wanted to share with you guys. This is a sample of your monthly payments based on your credit score. So hypothetical, you take out a loan of $10,000 and you want to repay this loan in 3 years. If you are under fair credit, which is between 621 to 699, your sample interest rate can be 16%. Your monthly payments would be at $354. If you're at good credit, 700 to 759 credit score, your sample interest rate would be 12%. Your monthly payments would be $331. If you have excellent credit, 760 and up, your sample interest rate would be 8% and you'd be paying $313. Do you see the difference in monthly payments? It might not be much, but at the end of the day, paying interest, you're saving yourself some money somewhere. Things are only getting expensive nowadays, right? And we'll go into more detail with interest rate in the next slide. But this is just a visual so you guys can see the importance of having great credit, okay? Ben, if I can have you go on to the next slide for us, please. Awesome. Managing your debt. This is an important slide, okay? Consider debt consolidation. So let's say you have multiple credit cards, 3 to 5. You're paying one here, one here, one here. You're able to consolidate your debt into one loan, which is called personal loan. If you're tired of paying an interest rate of 20% on one, 25 on another, 15 on another, you can consolidate. That's called debt consolidation, okay? So instead of paying multiple cards, you'll only have one payment. It's recommended if you just want to save money and eliminate your debt faster. Pay off debt faster by refinancing to a shorter term. So if you don't want to pay off your loan in 3 years and you want to do it in a shorter term, you are given the option to do so. It's called refinancing. Lower your monthly payments to help free up cash. So like I mentioned, with debt consolidation, instead of paying 5 credit cards, one here, one here, one here, you can do debt consolidation and just pay up 1 bill. Know your limits. I feel like we all know where we stand financially, whether we want to realize that or not. So just know your limits when you're out and about. I know I've used this word throughout the whole presentation, but accountability, you guys, it's very important. Another visual. So this is where I wanted you guys to see an actual visual representation of a high sample interest rate. So for example, a $10,000 loan with good credit, like we mentioned, it's between 700 to 759. Let's say you want to repay that loan in 5 years, okay? You're given 15% interest. Your monthly payments would range from $240, okay? In those 5 years, the total interest paid would be $4,429. Out of that $10,000 loan that you took out, you'd be paying $14,429. That's a lot, okay? Let's say you want to pay off your loan in 4 years. Your sample interest would be 14%. Your payments would be $276. But your interest that you've been paying would be $3,235. The total amount paid would be $13,235. As you can see, the lower the rate it gets and the higher the rate it gets, it's expensive. It's a lot of money. The last one, you decide to pay off your loan in 3 years and they gave you 12% sample interest. Your monthly payments would be $331. Your total interest would be $1,912. Your total amount that you'd owe your lender is $11,912. So the faster you pay off your debt, whether if it's on a personal loan, a home, a car loan, a credit card, the less interest you'd be paying. It's important to pay yourself and not the lender, right? So if you do consider this, the faster you pay off your loan, the more interest you'd be saving for yourself, because you don't want to pay anybody else but yourself, right? So that's another visual I wanted to share with you guys. Let's see. Awesome, Ben, if we can go on to the next slide, please. Getting ready to apply. So identifying your financial goals. I want to be very clear that everyone has different financial goals. Mine are different from my colleagues, from my parents, from my siblings. Everyone stands in different financial aspects, right? It's different. It's okay. But the faster to obtain a goal, to make it happen, is by writing it down. So as we see here on the board, for example, buying a house, write a completion date. By what age do you want to have that house? The total funds needed, the borrower funds needed, right? I'll share a personal financial goal that I have. I actually wrote it down. Like I mentioned, I'm very visual. So in order to hold myself accountable, I have sticky notes on my fridge and my car, outside of my room, just to remind myself what I want to do and by when. So I gave myself 6 months to pay off my credit card. I'm actually getting married in September, so we've been using my card for expenses. I gave myself 6 months to pay off the balance that I owe on the card before I get charged interest. So I know I need to meet that deadline in 6 months by the end of the year. So I do check-ins every 3 months to make sure that I'm on track. So like I mentioned, writing them down, it will make everything happen. Your goals will come alive and you'll be holding yourself accountable. So once you write down your financial goals, it's important to know your credit score. So like I mentioned, you after this presentation, take the time to download TransUnion or Equifax or Experian, one of those 3 credit bureau apps. And like I mentioned, it's free. It's secure. You'll be putting in your personal information. Of course, it's going to ask you for your social security number. I personally use Experian. I love it. I've never had an issue. I'm actually alerted anytime my credit has been ran. So very secure, you guys. So that's where you want to check your credit score. The next one, check your credit report for accuracy and dispute any errors. So identity theft is common, don't panic. It's okay. If you check your credit report and you see that something's on there that you did not authorize, that you did not initiate, you can actually dispute it on there. It'll actually take you through a walkthrough. You'll click on the item that was not you, and there's actually a direct line for you to call for you to dispute. So this is what I like about the bureaus, that if it wasn't you, they have your back and help you with eliminating that dispute off of your record. Like I mentioned a few slides ago, calculating your debt to income ratio, you guys, it takes 3 minutes just to hop on the internet, placing wellsfargo.com/debt ratio, put how much you're making in a month minus your monthly expenses, and it'll give you your percentage and you'll be able to see where you stand financially. Sometimes we need a little wake-up call to get where we want to be, right? And then for the next one, explore credit information, tips, tools, options. We have an amazing site on the wellsfargo.com/smartercredit. If you don't bank with Wells Fargo, that's perfectly fine. Check in with your financial institution to see what they offer to help you, be successfully financial. Check in with them. Everything is at no cost to you. So if you have Bank of America or Chase, call the branch or go online and just ask questions. It's definitely okay to do so. And it leads into the last bulletin on this slide. Talk to a banker. What better way to get a clear understanding of where you need to be, right? Talking to someone face to face. You can do so. If you bank at another financial institution, but you want to call us, you can definitely do that. But these are little tips and tools that you can do to identify your financial goals and getting ready to apply. Whether if it's for a car loan, a credit card, a line of credit, whatever it may be, at the end of the day, it goes down to the same thing, okay? All right, and then Ben, if I can have you go to the next slide for us, please. Perfect. So how to reach us. So a lot has changed with COVID. We are currently by appointment only, which is great because it blocks off a whole hour for us to talk about your financial goals, what you want to do to succeed financially. It gives us more of a one-on-one, a personal level, right? I have the barcode on there for you to actually scan over if you want to make an appointment. Like I mentioned, you don't have to bank with Wells Fargo. You can bank anywhere else. But if you want to talk to someone, check in with your financial institution to see how you can meet with a banker. If you don't want to come in, you can actually call over the phone. This is actually our customer service. It's 24 hours a day, 7 days a week. So you'll always be able to speak to someone. Or if you just don't want to do that too, you can use our resources that we provide online, which are free at no cost. It's very important to understand that there's so many resources out there for us to use and navigate through. In today's society, no one else is going to do it for us, right? We have to do it for ourselves. Alrighty. So I know we're going to go into Q&A, but I just want to provide my information. If you guys feel comfortable, you guys can email me or call me. I'm actually located in Stockton on Pacific and Lower Sacramento Road. My branch line is 209-477-7008. And my work email is jessica.l.serrano@wellsfargo.com. If you guys have a question or concern, you guys can feel free to give me a call or email me. But I did want to kick off the Q&A just to get a visual and understanding. When's the last time you've gone to a bank? When's the last time you've sat down with the banker? Have you done that? I just want to get a feel of where we stand in the community and what we can do to help you guys, I don't know if anyone else has another question for the Q&A, but if you guys do, please feel free to ask away.
Right here. Here we go.
Really appreciate that presentation. That PowerPoint is really informative, and we really appreciate it. To start off with a couple questions just right now. So coming out of the coronavirus pandemic, I know a couple of the banking institutions were requiring appointments to be made for anything that you wanted to be done. Is that still the case? I know you can probably only speak to Wells Fargo, but as far as you're aware, do you need an appointment to come in to open up an account, create a line of credit?
Yes. So we're still doing appointments only. The easiest way to access and check to see what we have available is through our wellsfargo.com/appointments. You can choose a location, you can choose a date and a time, and then you just provide us your information. We contact you right away, and then you have that slot saved. Yes.
Perfect. Thank you. And then what documents would we need? You mentioned we can really get a credit card or open a line of credit in a lot of places. So whether coming into a bank or opening at a gas station, what are there specific documents or information that we would need for that appointment?
Good question. So just to identification, a driver's license, state ID, passport, and your social security. But I do want to give you guys a tip. Be very cautious when applying online. I know we'll get some ads online that say apply here, you'll qualify for a Discover card. Be cautious about doing applications online because we have a lot of scammers, it's a lot of fraud going on. So if you guys prefer meeting in person, that's awesome, or actually going in person at the gas station or at the mall. Just be very cautious applying online, you guys, because you're providing sensitive information.
Great. Thank you for that. Incredibly important, especially right now. I know there's all of those scams and cyber attacks happening. So,
oh, yes.
Yeah, good to know. Is there an ideal number of lines of credit to have? I know when making bigger purchases like a house, they might ask for multiple lines of credit. Is that something to take into consideration?
Good question, Ben. Yeah, so it's recommended to have at least 3. You want to work your credit any way you can, right? One thing I do want to point out is that for Experian, what they look at is they don't like to see more than 6 inquiries on your credit report. So what that means is you want to make sure you're not running your credit more than 6 times in a year, because that knocks points off, and that just doesn't look well with the credit bureaus. They see it as why are you running your credit so much? So be cautious. It will knock down your points, and that's one thing that they look at. So just be cautious. More than 6 times a year, you do not want to run your credit.
Sure, that makes sense. Thank you. And then last kind of question I have here is, you mentioned possibilities of maybe paying off something a little bit quicker and refinancing that way. Is it possible to pay something off too quickly, like a car, and getting dinged for that with your credit score?
Very good question. Not at all. That's actually that's recommended. Now, keep in mind, every financial institution, every lender is different. Okay, so for example, with Wells Fargo, you are able to pay that off as soon as you can. I know that some lenders don't like you doing that because you will get penalized a fee. So you always want to ask the question when applying for something, hey, if I pay this off sooner, will I be penalized? Because that's how they get you. So you want to make sure you're asking the right questions. Very good question, Ben.
Wonderful. Great to know. Okay, thank you. I think that's it from us. So I just want to say thank you for all this information, and a quick little thing for anybody watching. If you want to come back and rewatch portions or all of this, this video will be hosted on our Facebook account at ASM Villapudua, also on our website, which is asm.ca.gov/Villapudua. And with that, I will turn it back over to the Assembly member for some closing remarks.
Great, thank you. Let's see, am I on? Yeah, I am on. Mr. Serrano, thank you for all this information. This is, and Wells Fargo, right? This workshop was very important to me because I was one years back, that when I got offered to have a credit card, it's so easy to spend and not think that, it's going to ruin your credit. I mean, I was lucky that I was only like late, on a fee, but I've seen so many people that it doesn't just hurt their credit, but it hurts them even applying, for a job, or, I know a lot of folks, especially that are in like, they go into like law enforcement or they have to do a background, and they sometimes do that background check, and one of them is their credit. So I think, and that's why I thought that this was going to be very, very important for anyone, not just our younger folks, but for anyone that are thinking about buying a home or buying a car, applying for credit. This is important information. And I want to thank again, Wells Fargo and Mr. Serrano for all of your help. This is why I think that we continue to have these workshops, because we want to make sure that our community thrives, are protected and healthier, right? So thank you, Ben. Thank you for setting this up. We really do appreciate all of you for your help.
Thank you, guys.
All right.